Welcome class to this discussion on the fundamental concept of partnership. So in today's class we are going to take upon another very important account of partnership. So a partnership firm also, like a sole proprietorship, it prepares trading account, profit and loss account and balance sheet. But in addition to these accounts, there's one more account which is prepared, and that account is called profit and loss appropriation account. Now what is the need of this account? In sole proprietorship, the profit and loss account results with net profit or net loss, and that net profit, if net profit, was added to the proprietor's capital in the balance sheet, isn't it? Or if there's net loss, it was deducted or subtracted from the proprietor's capital. But partnership is not the same as sole proprietorship. In partnership, there are more than one person who are owners of the business. So in partnership also there is a profit and loss account prepared, and the profit and loss account will yield net profit or net loss. So once the net profit or net loss has been found for a partnership, the whole amount of net profit cannot be taken to the balance sheet, neither the net loss. Okay, so here there's a difference when we talk about partnership. Right after the profit and loss account is prepared, we have to prepare immediately after profit and loss appropriation account an account which is known as profit and loss appropriation account. Now this is the account where the profit and loss which is generated from the profit and loss account is appropriated. Appropriated means to put that profit or loss in the proper places, or to distribute that profit or loss in proper way. Now what do I mean by proper way? It means to the partners. It has to be appropriated among the partners. So profit and loss appropriation account, if we say what are its features, we may mention that it's just an extension of profit and loss account. It's just an extension of profit and loss account. And such an account is only prepared by partnership firm, remember that. Except for partnership firm, other businesses don't maintain such an account. And it is showing the appropriation of net profit or net loss for the accounting period. Whatever net profit or net loss is generated from profit and loss account, that will be appropriated in this account. And we have to they have the points relating to appropriation of profit must be indicated in the partnership deed. So as per the agreement in the partnership deed, the appropriation of profit will be done in the account profit and loss appropriation account. So what are we showing in this profit and loss appropriation account for a partnership? Here all the adjustments relating to partners' salary, partners' commission, interest on capital, interest on drawings are to be made in this account. If any partner is given a salary or a commission or interest on their capitals, all those must be charged to this account. Similarly, if a partner has to pay interest on their drawings, then that interest on drawings received from the partners has to be also taken in this appropriation account. So when we prepare profit and loss appropriation account, it always starts with the net profit or the net loss which is there from profit and loss account. It is transferred from the profit and loss account. So we'll see a format of the profit and loss appropriation account. So here you can see the format of a profit and loss appropriation account. The particulars amount. So this account starts with the profit or loss generated from the net profit and loss account. So if the profit and loss account is showing net profit, then that amount will be taken to the credit of this account. And so the profit and loss generated from the net profit and loss account will be taken either to the credit of this account or the debit. If it is a net profit, that will be recorded in the credit side. If it's a net loss, that will be recorded here. Once these two are taken, then you are going to charge or appropriate the profit. Not charge, it will be appropriating the profit. So whatever the firm will be paying to the partners, or what the partners are entitled to as per the partnership deed, all those will be debited to this account. Why debited? Because when all this entitlement to the partners will be a charge to the profit. So from the profit, these will be paid to the partners. So the profit being a credit balance, it will be reduced when we will pay to the partners. So reducing the credit will be done by debiting the profit. Okay. So interest on capital, salary to partner, commission to any partner will be debited to the appropriation account. And if there is any interest on drawings that is charged on the partners, then that interest on drawings will be credited to this account. And this will be the net loss. If the profit and loss account has a net loss, the net loss from the P&L account will be brought down here. It will be transferred here if there is loss. Both of these may not come together. Either of it will come. Either it will be the profit from profit and loss account or loss from profit and loss account. And once these all have been entered, then the account will be balanced, and whatever the amount is balancing figure, that profit has to be distributed among the partners, and it will be distributed in their profit sharing ratio. Okay, profit sharing ratio is a ratio in which the partners agree to share their profit or loss. So if it is showing a credit balance, which will be an amount here, it will be distributed as profit among the partners in their profit sharing ratio. Whereas if the account shows a debit balance, means the balancing figure appear here, then the same amount will be considered as a loss, and this loss will also be distributed among the partners in their capital profit sharing ratio. So this is how an appropriation account is maintained. It has to be prepared right after profit and loss account, and preparing profit loss appropriation account, then we prepare partners capital account. So here are the various entries, journal entries in relation to profit and loss appropriation account. So from the profit and loss account, the net profit, if there is transferred to the profit and loss appropriation account. So from profit and loss account, the amount of profit is debited to profit and loss appropriation account. Whereas if the profit and loss account shows a loss, if there is net loss, that net loss is again transferred to appropriation account by debiting the appropriation account to profit and loss account. This is transferring the net profit or net loss to profit and loss appropriation account. Then if from the net profit the partners are to be given interest on their capital, then interest on capital will be debited to profit and loss appropriation account, and the same interest on capital will be transferred to their capital account. This is transferring of interest on capital to partners capital account, or it may be current account. Individually to each partner, their capital account will be credited. And here also you have to mention the interest on capital that is payable to each partner, which will be to the debit of appropriation account. For interest on drawings, again, interest on drawings will be transferred to the partner's capital account, which will be debited to their capital account. But the same interest on drawings, when it is to be transferred to appropriation account, you have to credit it to appropriation account. Means appropriation account will be credited here with the interest on drawings. For partner's salary will be credited to the partner's capital account, whereas it will be debited to profit and loss appropriation account. Same goes for partner's commission. It will be credited to partner's capital account and it will be debited to profit and loss appropriation account. Why we are crediting the partner's capital account or current account? Because commission is a form of earning for the partner. So anything which the partner earns from the firm, it is always credited to their capital account, whereas whatever the firm is paying to the partners, that is debited to profit and loss appropriation account. So appropriation account is an account which shows the appropriation of profit to the various partners. So when it is paid by the firm to the partners, the appropriation account is debited, whereas if the partners receive something from the firm, their capital account is credited. And once the appropriation account is prepared, then whatever the profit or loss after appropriating the various items, the appropriation of profit is done. If it is profit, then profit and loss appropriation is debited with each partner's capital or current account individually in the profit sharing ratio. But if the appropriation account shows a loss, then the loss is debited to the partner's capital account or current account individually and appropriation account is credited. These are the various journal entries that you may show for profit and loss appropriation account.